Hello everyone. Apologies. I've just realised I was talking away and unfortunately I had the mute button on. So apologies for that. I was discussing our trade plan, looking at some of the opportunities to focus on. So yeah, I do apologise. I've started the presentation with the sound on mute. So what I was saying, we went through the actual markets just then, is that there's a couple of markets giving us a potential opportunity for dollar strength. There's another few. Good morning, by the way. I hope you're keeping well. I'll just put a little note. Okay, so just posted a little note in there. So what I was saying is there's actually a couple of opportunities like the dollar Swiss, where if we get a rollover below the 97.44 in the dollar Swiss and then in the dollar CAD below the 128.84, then they're high probability dollar weakness trades. And that's really worth focusing on. However, if we get this price rolling over below the 28.59, then it has the potential to sell off. Now, just recently, if we look at 15-minute time frame, we've had a lot of aggressive strength coming in off the lows. So I'm sure we'll find out shortly what's responsible for that. But it doesn't necessarily mean just yet that we have to take our eyes off it. We still like it lower, and the reason for that is because we've struggled to break above the 29.36. So from a technical perspective, we've had a pullback off a low. We've created a high at 29.36. We've attempted to make a new lower and failed. And yesterday we attempted to break the high, which would have been a structural failure for the pound dollar. But instead we got a rejection off that level. And now we're expecting continuation to the downside. So we've actually got a couple of dollar weakness trades in the we've got a couple of dollar weakness trades in the dollar Swiss and the dollar CAD. They still need to move just a little bit for us. But if we're talking about dollar strength, then the pound dollar is a high probability trading opportunity, and so too is the Aussie dollar, and I'll show you why that's the case. So let's go over to the daily time frame. It's a similar situation to the pound dollar. We just had a bearish candlestick yesterday, and now we're getting price action rolling over. Now we're getting a bit of dollar weakness creeping back in. So we've just got to understand that that's the case. Let me see which price is the low, the 73.21. So 73.21. So that's the level. That's yesterday's low. That's the important level for this market. 73.21. So what we're saying is we've had a really strong flush to the downside. So what we'd like to see in this market, and I'll get up my pen just to share it with you. Is we'd like to see this market pull back if we can in and around the 73.21, and then from that level that could give us a strong move to the downside. So a little bit of work is necessary, and we can assess this as this market moves. But what we're looking for is for this market to actually continue lower. So that's the trade idea behind a little bit of dollar strength, if that's what we're seeing. We'll be watching this very closely on a daily time frame. So this is the daily low, the 73.21. If this market pulls back to that level, it would give us hopefully a nice positive risk reward trade to the downside in the Aussie dollar. Now we'll keep an eye on the dollar elsewhere just to see how strong or relatively weak the dollar is, and we may switch these two trades for the dollar Swiss and the dollar CAD if some dollar weakness starts to creep in. So we'll keep an eye on these two and just see what's going on for now, because we do have a slight biasness today for dollar strength. So in terms of a directional bias, we're looking for opportunities to maybe get into a dollar strength move, unless things change. And of course things can change very, very quickly indeed when we trade these markets. The US oil market, you can see we've had a bit of a strong pullback, again like we've seen in many of these markets, and now we're potentially looking at the 68.57 to see if we get that explosive move to the downside below the 68.57. So apologies for the sound issues, but hopefully that gives you a brief understanding about the trades that we're looking at. And again, as always, we may just need to be a little bit patient, give these markets a little bit of opportunity to get into them. We really want to see this market squeeze higher. We don't really want it rolling around from the 73.10. If it could squeeze a little bit higher, that would actually be better for us, and then it would be a little bit cleaner. The pound dollar is a bit strange. We've had a bit of pound strength creep in for no sort of major reason really. I'm sure we'll find out if there was a reason for that. The US oil threatening to push lower, but obviously no real momentum behind it just yet. And no other significant markets really that we want to have a look at. The only caveat to that would be if we just switched from the dollar Swiss and the dollar CAD as well, which we can quite easily do. However, the pound and the Aussie is what we look at for now. So if the dollar strengthens, we could look at the pound and the Aussie, and if the dollar weakens, we can look at the Swiss and the CAD. So they're kind of primed already to the downside, both of these markets. So it's just capitalizing on continuation really. That's the trade idea. But for now, we'll prefer to focus on the pound dollar and the Aussie dollar. It's a shame with the Aussie dollar that we've effectively we've seen a lot of the move in the latter part of the Asian Open. Obviously, when we're not at our trading desks, so that's fine. We can trade what we see when we get there, and we're currently experiencing a pullback. So now we're going to just sort of bide our time really, and just wait for the opportunity to arise. So right now there's not a significant amount of opportunity. So as a result, we need to obviously trade what we see and trade the market conditions, and please continue to be aware that of course the market is is still on its summer holidays. So if we get the moves like we saw yesterday, we can quite gladly look to book in profit on those. So I just want to see the price action on a smaller time frame, like a 15-minute time frame for the pound. So we've only literally had sort of half an hour's worth of quite bullish price action. A strong reversal off the highs here. So I'd be interested to see what happens next. Do we try to get continuation, or does it attempt to push higher again? Let me see if there's news events. Nothing really impacting so we've seen a little bit of dollar weakness just in the last half an hour, but not as much as we've seen in the pound. No, nothing there. It's not significant sort of movement really, but no more than usual. But then when we look at the pound, we've had a bit of a sort of a spike. Maybe there's a bit of manipulation going on maybe in this market, which is what you can find and experience when you trade lighter markets. This market was clearly moving lower. Maybe there was a series of stops up here and price was pushed to clear these people out, and then maybe it moves on its way. Either way, when we look at it on a daily time frame, you can see the indecision, and you can see also why we're looking to sell it. We're looking to stick with the with the movement of this market, which is very much to the downside. And that's the pound dollar there. So we look at this candlestick and we suggest that the current price, the 28.70, the low of this market is the 28.45. So we're only 25 pips away from these lows, at which point it would then look quite potentially an opportunity to sell. So we shouldn't really take our eyes off of this just because we've had a really strong sort of 40, maybe 50 pip pullback in this market. 40 pip pullback. So we've already retraced 10 of those pips. So we're only really 20, 25 pips away from the low. So we can see that move relatively quickly. So that's why we're going to continue to look for opportunities in the pound dollar, also the Aussie dollar. So let's see if we get this market pulling back to the level that we would like it to. But really we want to see another 10 pips pushed to the upside in this market, so we'll see if we get that opportunity, and US oil as well. And the threat for the US oil to sort of roll over and squeeze lower still exists. So again, we're not that much off the lows. We're about 30 pips, effectively close to 30 pips off this low. So if we get that push, we can get into that trade. So maybe a pullback trade in the Aussie dollar shortly. The pound is sort of in a strange phase right now, so not too sure what's going on there. So for that reason, if you're in doubt, we're going to stay out. We're not going to be jumping into it. We're going to get a high probability opportunity to trade, hopefully. Just want to look at this at smaller time frames. So there's a gap higher on the minute time frame for some reason, and then we got a really strong explosive move higher. A strong buying candle kicking in. Market moved sideways, gapped up, and then extended higher. So maybe there's something driving that move. I'll just see if there is anything on the news channels. I mean, it's not a wildly significant move, but it does look and feel that there's something driving it. Okay, UK and EU drop October deadline for Brexit deal. So I'll bring this over. So this was released a good few hours ago, so maybe it was just the market reacting to it at 8 AM. The UK and the European Union still say in public they want a Brexit deal wrapped up in the next 7 weeks. Behind the scenes, though, senior officials on both sides admit this is unlikely. So that's very likely to be the reason for this bit of bullish price action, which might mean we should probably take it off our opportunity list, which is fine. We can still continue to monitor it on a daily time frame just to see how this price is behaving. We still don't really want to move away from the technicals, and below the 28.59, this market is still quite technically bearish, or has the potential to be. But the important level in this market from a bearish perspective is actually the 27.99 or the 2800. So as things stand, we are still 70 pips away from having real confirmation that this market remains bearish. So it'll be interesting to see how this price action stacks up and if we start seeing some pound strength. So let's go over to a good indicator. Actually will be so we're getting a bit of pound strength coming back into the market, and we're getting a rejection of yesterday's highs. So obviously the news that the Brexit negotiations are going to take a little bit longer than anticipated is interpreted, as far as the markets are concerned, as providing a bit of strength for the British pound. So that's how it's computing itself. That's how you can read it. So Hans, I'm just looking at your comment. Good morning to you. Hope you're keeping well. So you're long from 28.50 in the pound dollar. Okay, so that's just below actually yesterday's daily low. So just for consistency purposes, we work with daily lows and daily highs. They give us a really solid platform. They allow us to stay out of trades that don't perform. They allow us to get into trades with a higher degree of certainty. But look, that's horses for courses, effectively, as we say here. So obviously you apply a slightly different technique to your entries, which is, there's nothing wrong with that. Proof will be in the pudding over the medium and longer term in terms of seeing your account balance. But what we're advocates of is, for the reasons why you got into the pound dollar, for you to be as consistent with that decision making as you can, and that's where we think the true test for those of you looking to become consistently profitable. So we just use daily highs and daily lows to assist us and to give us a little bit more confirmation on our trades. So all that's happening then, Hans, is that you're probably seeing this low in here, which is so that's the 28.50. So we've extended lower. We've had a bit of a rejection of the low. We've had a green candlestick kick in, and this is on a 15-minute time frame. So and I wonder, just out of curiosity as well, Hans, what would be the reason why you got in at 28.50? Can you identify a specific reason for your entry at that price? Maybe it was the psychology of the 28.50. Maybe it was the rejection candlestick. Let's have a look at it on smaller time frames. So we've extended lower, a little bit of hesitation, small pullback. So I'd just be curious to see what your reason for entry is. I mean, maybe you're using an indicator. I'll have a look at it on a smaller time frame as well. So this is the price action that you were trading on a minute time frame. Maybe what we call a structural failure, potentially. The price just breaking above. Okay, so your Renko strategy tells me to go long. But surely your Renko strategy would just show the market moving lower, and then you'd probably get, I don't know what time frame you're looking at on a Renko chart. So did you see? You don't see exhaustion or anything like that on Renkos, do you? So on your daily time frame, the 20 SMA is holding for now. Okay. Let's have a look. So moving average. You say 20 period, I think. 20 period SMA. simple. Turn it to a nice blue. So okay, so that fits in there with that piece of analysis. $28.44. Yeah, no, great. I'm just sort of so Renko bricks of 10 pips give you an uptrend. Okay. So each brick is 1 minute. Would that be correct, Renko? Sorry, Hans, with your Renko strategy. Well, I mean, so far so good for you now, Hans. So you see, and this is really the beauty of the financial markets, is that people have very, very different opinions for different reasons. What we would suggest, over and above the strategy that you happen to apply and the strategy that we happen to apply, is the consistent execution of that strategy. We think that is actually more important. Now, that's not a trade that we would specifically look for. Obviously, we don't have no, it's not about time, only price. Okay, interesting. So we can definitely see on smaller time frames, like if we look at the if we look here at this, there's an attempt to break lower. We've got the psychological level of 28.50. We've had a sort of a double bottom at these lows. If we can we've failed to break these levels down here. We've had a structural failure to the upside, even though it's a small one. And we've had a strong momentum to the upside, and we're now back above the 28.50. There is a case to argue for some strength. So very, very well done on the trade to obviously get into that. Something is clearly driving it. I guess the 8 a.m. When traders are hitting their news desks, we had a little gap up here in this market, and we've had some continuous buying coming in. Not to detract from your trade idea, but an opportunity that breaks below the daily low, the 28.59, bearing in mind the yesterday's price action and the double top sitting up here on a daily time frame. We would ordinarily be looking to sell below yesterday's daily low, which is the 29.59. But obviously that occurred during the Asian Open, and we've had a strong reversal since. So that's on a 5-minute chart. So it'd be tough for us looking at this to suggest buying at this level. That's the only sort of caveat, really. So yes, we could argue an opportunity to buy it. It just happens to be not the type of trade that we look for consistently. So we can keep a close eye on it. We've struggled to break this high up here. Is that the 15-minute high? Yeah. So we have a lower high sitting in this market, and a bullish spinning top, and now we're coming back. So we'll see where this market comes back to. It could be the beginning. Obviously, if you're correct, Hans, you know, seeing the pullback wouldn't necessarily be a bad thing if it creates a low, and then it might just get more fuel from buyers at some point to actually push higher. So it's still got to work quite hard to break through the daily low, the 28.59, and that's the good news. You've now got supportive elements as well to this trade from the daily low, and also from yesterday's, so one daily low and today's daily low. So when you get in at the 28.50, I'm sure you got your stop loss maybe just below this low here, or whatever signal you happen to be using. So I'm sure you've got a very, very small stop loss on this trade. It wouldn't make sense to leave any more on the table. Maybe you've taken the risk off the table already, I'm not sure, but you're in a great position. Really nice strong move. You were up at 28.80. pulling back just a little bit, but that's absolutely fine. That could create a bit of a structure, maybe even at these levels here, before we get the next move to the upside. So potentially great trade, and like I said, you've got lots of levels of support preventing prices from pushing lower. So okay, so the 2800 is key support. So you're putting a 50 pip stop on it. So do you mind me asking then, what sort of profit are you looking from this trade? What would be your profit target or your take profit on this market? Just out of curiosity. Obviously, we don't trade with Renko bricks, but we do know a number of our traders do. Okay, so you've got a positive 2-to-1 risk reward. So you're looking for 150 pip winner in this market, which would bring obviously up to this level up here somewhere. So yeah, that's just I mean, to be fair, we're very close yesterday to a structural failure, 29.36, and if we get a break above that, then I mean the 130 level is clearly in sight. Then at that point, we're just much lower from that, which is a weekly high as well. So we've got some resistance preventing prices from pushing higher as well. So it'll be very interesting to see how it plays out. Hans, and we wish you all the best with the trade, and we'll keep a close eye on it. It's just we're firmly advocates of looking for opportunities to sell this market below the 28.59, so hopefully this market stays above it, and you can get a really good trade out of this. So we wish you well. It's great to see that you've got a positive risk reward. A lot of traders can have a really long stop loss and a negative risk reward. So that is it's very important you adopt. You can always change the ratios. Sorry, not the ratios. You can always change the actual the size of your stop and the size of your return. But having a positive risk reward ratio, we think is a very important part of trading, which means you don't have to get the majority of your trading decisions correct, and you can still make consistent returns. So that's some of the benefits of having a positive risk reward on those trades. Yeah, our pleasure. Okay, good luck with that one. I mean, we've got no intention of trading it at these kind of levels, so we certainly wish you the best with that trade. Really strong pullback, so maybe this is the sign of a series of higher highs in this market. Okay, so let's put this back into place. We'll see. We'll continue to monitor it really on the 15-minute chart. We really struggled to sort of reach these highs, which would give us the entry that we would prefer, and we prefer to sell at this level once we make a low. And this is just pure technical analysis. And when we get these highs that don't quite reach, it just reduces the potential for a probability for a high probability trade. Getting a bit closer, edging a bit closer to our 68.57. So just going to have a look across some of the other markets. If I take a look at this market here, below the 1661, yesterday's low could constitute selling the euro dollar. We're still focusing on the pound dollar for now. I see the dollar yen sort of in the middle of nowhere really. Bit of strength, dollar strength coming in to the dollar Swiss, the dollar CAD, which is why we're backing off these markets today. And yesterday we were very happy to get into them. We're seeing just prices, as you can see, the last hour just almost moved sideways really. Nothing happened in New Zealand. So I wouldn't say it's a dollar strength picture, but it's edging towards dollar strength. And the gold market is selling off a little bit. So if this reverses below the 11.99, then we'd expect this market to continue lower. So it looks like we're getting a little bit of dollar strength looking to creep in to some of these markets, not all of them by any stretch. The oil market is still an interesting market for us if this builds up a bit of momentum and starts squeezing lower. Maybe we might not see that until the US inventories, US crude oil inventories later on this afternoon at 3:30. US equities, again, bullish outlook. European equities, not so bullish. Okay, a couple of markets we've been looking at recently. So eventually we saw the breakout to the downside against the pound yesterday, getting a bit of buying coming back in today in the pound Swiss. The Euro Aussie was a great trade. We had the clearly defined double bottom, we had the structural break to the upside, and we had a nice strong move higher. So good trade in the Euro Aussie. Still pressure on the gold, on the silver market, and pound New Zealand. Yesterday, a strong selling day, and today we're getting a little bit of buying. So some mixed pictures creeping into a few markets. Really, for the miners and the exotics, we'd certainly rather normal market conditions before getting into those. We will look at. So there's some strength building up here in the euro dollar, which means we might look to add to that trade, to our trade analysis shortly. Okay, so I think it's worthwhile just adding this market to the remaining markets. So we'll split the picture into quarters now. The pound dollar. We'll keep an eye on that on that side. The Aussie dollar. We can have a look at this market top left, and we'll keep an eye on the gold market. Sorry, the oil market bottom left. So let's see if we get this this break lower. So it's the euro dollar that's looking quite interesting. Let's have a look at this in the 15-minute time frame. So you can see that a break below the 1661 could give us a good opportunity to trade a structural failure. So we're getting this market squeezing up, pulling back, and now we're potentially coming back to these levels, and again, from a consistency perspective, could give us a little bit of a move back. We've got the weekly high in here at 1639, so we could see how prices stack up at that point. So it could give us an opportunity to sell. We do need this price to break below the 1661 though, irrespective. So if that doesn't happen, it's not a tradable opportunity for us. So we're just very close to those levels as things stand. So let me just clarify, bit of a question mark over the pound dollar at the moment, because we've rejected the lows, we've bounced back, created a high. So now we either get kind of a structural failure, we start getting this price rolling lower like that, or effectively we start seeing the next leg kick on to the upside. So at which point that is our structural failure on a 15-minute time frame, and that would add more momentum to the upside hands as well. So as long as you're above the 28.59, which is the daily low, it's likely to provide support of price. So we'll see how we get on with that. For us to get into this to the downside, we need it to work quite hard. So what needs to happen is we probably need to break the 28.59, and then if we get a pullback and then it creates a structural failure, then at that point we'd be happy to sell it. So it's got to work very, very hard for us to even think about getting into this market to the downside. So for that reason, we'll put a little question mark in there. Question mark over the pound right now, with actually, as it stands, a bullish bias, as opposed to our potential opportunity to sell it below the one-day low, which is 28.59. So with the euro dollar, we quite like the potential for this to sell this market below the 16.61. We haven't been able to get into any trades yet. We want to sell the Aussie dollar roughly the 73.21 and sell the oil market below the 68.57. So those are all the trades, and I'll just, for argument's sake, we're looking to only sell this market below the 28.59, and we're not sure exactly what that price will be just yet. It would have to be we'd have to be guided by the price. So those are our trade plan. We're looking to sell the euro dollar, sell the Aussie dollar, potentially sell the pound dollar, but only if we get that continued strength coming in to the dollar market, and potentially looking to sell the US oil below 85.57. So that's our trade plan. That's what we're looking to do. Now we need to be nice and patient and wait for those execution opportunities to arrive. So I do apologize. I'm conscious of the time. Hans will keep a strong eye on the pound dollar. Wish you well with the trade. We certainly won't be getting into it. We wouldn't be looking to buy those lows. Only if it sells below the daily low would we even consider looking at it really right now. So wish you luck with that trade. So very welcome to connect with us through our YouTube channel. Please do like and subscribe to the channel and click the bell notifications as well, and you'll be notified when we're live. And we can also connect with us through Facebook, Instagram, Twitter and LinkedIn. The details are there currently up on screen. Okay, so thank you as always for joining us. We are going to switch across to the live trade room. So for those of you that would like to become members, there's a 14-day free trial below. very welcome to join us. There's no obligation, no contract, no nothing. Just if you decide to continue on after the 14 days and you want to access our live trade rooms to get a really strong, comprehensive education in trading these markets, then the cost, which we hope you will be pleased with, is just as little as $9.99 per calendar month. So no strings attached, no obligation of any kind, just really strong, affordable mentorship trading these financial markets, and that's what we look to do here at the Live Trade Room. Thanks, Hans. Definitely look forward to seeing you later. We'll be back for the US Open at 1 p.m. So from everyone here at the Live Trade Room, take care, and we'll speak to you soon. Bye for now.